Welcome back to Market Day Report. I'm Chris Swift. I'm anxious to get to our new guest. Let's run through our grain prices here real quick, see what they're up to, and then we'll get to him here in just a second. So it looks like we're trading the May contract, 4.40 3/4, down 2 1/4 on the corn. July down 1 1/2 at 4.50 3/4, down 1 3/4, and that December 4.74 1/4, down a half. Take a look at the soybean market and see if it's doing any better. It had gains to it this morning. And still holding on to those gains, but barely up 2 1/2 on the May contract, 11.70 even. July up 2 1/4, 11.84 even, and that November contract 11.74 1/2, up a half. And Chicago wheat this morning, it's a little bit firmer, up 5 1/4 on the May at 5.90 1/4. The July contract, new crop 6.08 1/2, up 5 3/4. Kansas City, hard red winter wheat. It's a big mover today, up 13 1/4. There's been some stupendous gains put on that wheat market there. You might want to take that into consideration if you're looking to market some wheat. New crop July up 11 1/4 at 6.25 1/2. And take a look at Minneapolis spring wheat. It's a little bit firmer too. May's up 5 1/2 at 6.72 even. July up 6 1/4 at 6.78 1/2. I want to step over here and take a look at our energy markets real quick. The crude oil market down 55 on the June contract at 82.81. The July down 52 at 82.04. And let's take a look at our diesel market. This is the one that had an enormous change to take place over the last several weeks, and that is going from an inverted carry to a carry charge market, suggesting that the spot month front end just a little bit lower than the rest of the months, building that carry charge into the back end. So now that we got that out of the way, I want to ask the guy that knows about all this to come in, Riley Schwieger. He is with CHS. And Riley, I know we had an EIA report this morning that came out and a little bit of volatility, but there's been a lot of volatility in energy markets.
Yeah, it's been volatile recently, to say the least. We've really seen the bears take control over the last week and a half. Pretty significant downward move across the complex. Most of that's been really attributed to just a lot of risk premium coming out of the market. We've seen the conflict in the Middle East ease a little bit here. I would make a note that, with that easing, it's far from over, and that's going to remain an upside risk moving forward. Given the weakness, we have began to test some support levels in both crude and diesel. Crude, we're testing that 50-day moving average. We bounced off that earlier this week. Diesel, that 250 mark in the prompt futures is the one we're looking at. Those are kind of the levels we'll be looking at here the rest of the week to see if we're going to put in some fresh lows here short term. So EIA stats. Go ahead.
No, well, I was just going to ask, so when you're talking about the diesel fuel there, and we saw the little bit of a movement there going back into carry, we know farmers are really fixing to use a lot of it. Is there anything that you're seeing out there that might make you think it'd be higher or lower in the next couple of weeks?
Yeah, we've got conflicting views. I think we're going to see an uptick in demand with farmers moving into planting season here, and that should help maybe pressure the basis market a little bit, which could drive prices up. But on the other end, we have this macroeconomic view that's shifted a little bit more hawkish, and diesel really feels the effect of that as it relates to the business sector. So we've got GDP numbers out tomorrow and a PCE report tomorrow that we'll be watching closely. Anything that gives the Fed a more hawkish view is really going to put pressure on these diesel prices.
Absolutely. And you were mentioning the EIA numbers. Do you have them just kind of handy real quick?
Yeah, just the headline numbers there. We saw crude larger than expected draw of over 6.3 million barrels. Diesel unexpected build 1.6 million barrels. Diesel demand was down week over week. So we're all seeing diesel futures off here just around 3 cents.
Fantastic. Riley, stick around. We're going to go away and take a real quick commercial break. We're talking to Riley Schwieger. Stay with us.